I got to say, trying to figure out what's going on in the markets these days, it's kind of like trying to walk through a minefield.
Yeah.
Blindfolded.
Yeah, no kidding.
But for this deep dive, you sent over this really interesting stack of reports. And, I mean, we're talking everything from CNBC and the New York Post to even, like, Crypto News, the Economic Times, Forbes.
Mm-hmm.
And the common thread running through all of them, it's the impact of President Trump's new global tariffs, like across the whole financial landscape, stocks, crypto, the whole shebang.
Yeah, it's a lot to unpack. It's basically like a bunch of snapshots, right, of how the markets reacted, right, when this huge policy change hit. And each one of these articles, they kind of give you a slightly different angle on that whole reaction, right?
Yeah.
So what we're going to do in this deep dive, we're going to try and connect those dots for you. We're going to pull out the really important stuff and try to help you see how these markets, which on the surface, they seem pretty different, right? How they're actually all kind of tied together, especially when you look at it through the lens of these new tariffs. Like, cut through all the noise and get down to the core of what's actually happening.
Okay, so let's start at the very beginning. When those tariffs were first announced, that 10% baseline on like almost all imports, and then even bigger tariffs on some of those huge exporting countries like China, the EU, Japan, Vietnam, coming down the pipeline.
Right.
The markets they kind of reacted like they'd been punched in the stomach,
Oh, for sure. And both the CNBC and the Economic Times articles, they really hit on just how fast and how hard the markets reacted. And then you throw in China coming back with their own retaliatory tariffs.
Right.
That just poured gasoline on that initial fire. So I think the big takeaway there is, like, right out the gate, the markets did not like this. These tariffs, they sent a signal, right? And it was like a big warning sign about all the ways these tariffs could mess up global trade and really put a dent in economic growth.
And the sheer size of that initial drop, it's just mind-blowing. I mean, we're talking U.S. equities having their worst day since, like, way back in 2020.
Yeah.
And globally, I mean, it seemed like trillions of dollars in market value just vanished.
Cool.
One report even said that the S&P Global Broad Market Index, which kind of gives you like a big picture view of how stocks are doing around the world, they lost, get this, $7.46 trillion in just 2 trading sessions.
Wow.
And the U.S. market, they accounted for a huge chunk of that.
What's crazy is how quickly everything became connected, right? I mean, you see one report saying the U.S. market lost $5.87 trillion, then another one bumps it up to $6.6 trillion, and that's all within a pretty short window. And then you zoom out a bit, you see another report saying $11 trillion has been wiped out since February. So this wasn't just like a little blip on the radar. This was a full-blown reassessment of risk across the board.
Yeah, and this wasn't just like a little dip, right? I mean, the Dow Jones Industrial Average, that thing took a nosedive.
Yeah.
People were even starting to throw around the term Black Monday.
Oh, yeah.
Which just makes you think back to that huge 22.6% crash in like 87, right?
Yeah.
I mean, that's a pretty scary comparison. And the New York Post article, they even mentioned how CNBC's Jim Cramer, he was warning everybody about this very thing, right?
I think bringing up Black Monday, that just goes to show how much fear was starting to creep into like the minds of the market experts.
Right.
When you see the Dow drop like 3,910 points over just 2 days, and that includes a day where it went down almost 1,700 points. That's a massive move, right? Then you add in the S&P 500 and the NASDAQ, both down around 6%, according to some reports.
Wow.
You start to see the picture, right? It's like a big sell-off, and it's driven by like a lot of anxiety about what these tariffs are going to do to the economy. It's also pretty wild to think that on one of those days, the market lost $3.25 trillion, which is actually more than the whole global cryptocurrency market was worth at the time.
Wow, that puts it into perspective.
Puts things in perspective for sure.
And Cramer wasn't the only one waving those red flags. Some analysts were even starting to talk about a potential recession, especially if that sell-off kept going.
Right.
I mean, Apollo's chief economist, Torsten Slok, he specifically warned that, if these tariffs stuck around for a few months and other countries started retaliating, we could be staring down the barrel of a recession, not just here in the U.S., but globally.
Yeah, I think Slok's warning, it really highlights a crucial concern here, right? You get this potential for a negative feedback loop. So one country puts up tariffs, then other countries, they retaliate, they put up their own tariffs, and pretty soon the whole system starts breaking down. The flow of goods gets disrupted, costs go up for businesses, and eventually that economic growth engine, it starts sputtering. And I think that fear of that scenario unfolding, that's a big part of why the market reacted the way it did.
But then on the other hand, we also heard from Treasury Secretary Scott Bessent. And he was trying to kind of downplay all that recession talk, saying the administration, they're playing the long game.
Right.
He even went so far as to say that the market's problems, they were more of a Mag 7 problem, talking about those big tech stocks, rather than a MAGA problem, implying that like it wasn't really the president's policies that were causing this whole mess. It kind of feels like a mixed message,
It does a little bit, doesn't it? I think what Bessent's saying is, first off, the administration, they believe that in the long run, the benefits of these tariffs, they're going to outweigh whatever short-term pain the markets are feeling now.
Right.
And then that later comment, it's almost like he's trying to shift the blame, right? Saying, hey, look, it's not just about the tariffs. It's those big tech companies. They're not doing so hot, and that's what's really dragging the market down. So I think this raises a really interesting question.
Yeah.
Are the markets freaking out solely because of the tariffs, or is there something else going on, like under the surface, that's also contributing to all this volatility?
Right. Okay, now let's shift gears a bit and talk about the crypto market.
Okay.
Seems like even that wild world wasn't immune to all the craziness, huh? I mean, Bitcoin took a hit, dropping below $80,000, then dipping down even closer to $75,000. And from what I read, it was down a good chunk for the year at one point.
Yeah, the crypto market definitely followed the rest of the market down that rabbit hole. And the Crypto News article, it really went into detail about how Bitcoin dropping, it triggered these massive liquidations. Now, in the crypto world, liquidations, that's basically what happens when a bunch of traders, they borrowed money to make these big bets.
Right.
And then the price moves against them.
Ooh.
So the exchanges, they got to automatically close out their positions, right? And then all that selling, it just pushes the price down even further.
Ouch.
Yeah.
And it wasn't just Bitcoin taking the hit, was it? I mean, other big names like Ether and Solana's token, they got slammed too. Initially, they were down around 8% and 6%, but then those losses, they got way worse. I mean, both of them ended up plunging as much as 20%. And even Dogecoin, even that got caught in the undertow, dropping by a similar percentage. Sounds like a full-on crypto bloodbath.
It was a pretty major correction across the whole crypto market. And when you see that over $1.3 billion was liquidated in just 24 hours, with most of that, like over $1.2 billion coming from long positions, bets that the price was going to go up.
Right.
It really shows you just how much leverage there is in the crypto space and how fast sentiment can change. And the fact that most of those liquidations were in Bitcoin and Ether long positions, that tells you right there where that bearish pressure was concentrated.
But it's interesting, though, because the CNBC report, it mentioned this idea that some people actually thought Bitcoin might become a hedge against all of these tariff risks. Like Jeff Kendrick from Standard Chartered Bank, he even suggested that with all this U.S. isolationism going on, traditional currencies might actually start to look riskier, and that can make Bitcoin more attractive. It's kind of a wild take, especially during a time when everyone's freaking out about the market.
It is. It's a really, really fascinating and kind of a contrarian viewpoint. Basically what Kendrick's saying is if global trade starts getting really uncertain and, traditional financial systems, they start feeling the pressure from all these protectionist policies, then maybe a decentralized alternative, something like Bitcoin, it might actually be seen as a safer bet.
Right.
So this kind of ties into a bigger question about how all this geopolitical instability, how that can affect how people invest across all these different asset classes.
Yeah. And then we hear from Treasury Secretary Bessent again, this time in the Forbes article, and he's saying that Bitcoin's actually becoming a store of value, like gold. He even pointed out that its price, it's actually been holding up pretty well compared to stocks, and it even outperformed the, quote, crashing stock market. And this was after that initial drop we talked about earlier, and apparently even after some concerns started coming out of China. So it seems like the whole narrative around Bitcoin, it was starting to shift a bit, even in the middle of all this market chaos.
What's really interesting here is how people are starting to view Bitcoin differently. I mean, Bessent's comments, they're suggesting that even with that initial dip, more and more people are starting to see Bitcoin's potential as a safe haven asset, just like gold.
Right.
And the fact that it held its own, relatively speaking, compared to the stock market during all this tariff drama, it seems like that just solidified that view. So this brings up a really important question.
Yeah.
Is Bitcoin finally starting to grow up? Is it starting to act differently during times of economic uncertainty compared to those traditional assets.
And it wasn't just Besant who was singing Bitcoin's praises. David Hernandez from 21 Shares, he also chimed in, saying that Bitcoin has the potential for returns that aren't tied to the traditional markets, calling its performance during this whole mess a, quote, true testament to its investment case as an emerging store of value. So it seems like some people are actually seeing all this market turbulence as proof that Bitcoin could be a good way to diversify your portfolio in the long run.
Yeah, what Hernandez is saying, it really reinforces that whole idea that Bitcoin can offer some diversification benefits, right? I mean, the fact that its price doesn't move exactly in sync with traditional assets like stocks and bonds, that's a big selling point for a lot of investors.
Yeah.
And these periods of market stress, like the one that was triggered by these tariffs, are like real world examples of how that lack of correlation can actually play out.
And then, rounding out the crypto discussion, Joe Burnett from Unchained, he made a really interesting comparison to March 2020, when Bitcoin supposedly hit rock bottom and then bounced back before U.S. equities. He suggested that this current downturn, it could be a good time for long-term investors to buy Bitcoin, while also warning that the stock market, it might still have further to fall. That's a pretty bold prediction.
It is. When Burnett compares it to what happened in March 2020, he's basically introducing this idea that Bitcoin might actually lead the recovery after a market shock, right?
Yeah.
So if that pattern repeats itself, it would suggest that investors who are, in it for the long haul with Bitcoin, they might see this dip as a buying opportunity. They're betting on a future rebound.
Right.
But that warning he gave about the stock market potentially dropping further, that's a reminder that, the overall economic climate, it's still pretty risky for all assets.
So zooming out a bit, it sounds like this tariff thing, it wasn't just a U.S. problem, right? I mean, it sent shockwaves around the world. Asian markets, they basically mirrored the panic here, with Japan's Nikkei 225 and Taiwan's TAIEX index both taking a serious tumble. I even read that Taiwan's TAIEX, they had to trigger circuit breakers, which are kind of like temporary pauses in trading to prevent things from spiraling out of control, to stop trading altogether.
Yeah.
That's a pretty extreme reaction.
Oh, absolutely. When you see those big Asian indices like the Nikkei 225 and the TAIEX dropping so sharply, and the TAIEX even having to hit those circuit breakers, it really shows you how connected global financial markets are these days. Trump's tariffs, they weren't just a domestic issue. They immediately sparked fear and sell-offs across Asia. And I think that reflects this global anxiety about a potential trade war and what it could mean for all these economies that rely so heavily on exports. And when some of those Asian markets temporarily banned short selling, where investors bet that a stock's price is going to go down, that was their way of trying to put a lid on the panic selling and stabilize things.
Right. And it wasn't just the big Asian economies that got hit. The Indian stock markets, they also felt the pain, mirroring that global sell-off. The BSE Sensex and Nifty 50, they both dropped significantly.
Yeah.
And I even read that gold and silver prices actually went up in India as people started looking for safer places to park their money. And the Indian rupee, it also weakened against the U.S. dollar. Just paints this picture of like widespread financial anxiety.
Absolutely. When you see the Indian markets, especially the Sensex and Nifty, taking those steep dives, it shows you how even economies with strong domestic growth, they can still get caught in the crossfire when global events shake investor confidence. And that classic flight to safety response, that's what you see with gold and silver prices going up in India. When there's that much uncertainty in the markets, people flock to those safe haven assets.
Yeah.
And the rupee weakening against the dollar, that usually happens when investors start seeing more risk in emerging markets.
Right. It seemed like almost no one was spared. I mean, even the world's richest people, their net worth took a massive hit.
Yeah.
We're talking hundreds of billions of dollars collectively erased from the fortunes of those top billionaires in just a matter of days.
Yeah.
And that really drives home just how massive this market upheaval was.
It's incredible, isn't it? The losses those billionaires experienced, they just show you the sheer amount of value that was destroyed in such a short period. And it's a good reminder that even for the most sophisticated investors out there, no one's immune when these big global economic shifts, like these tariffs, they trigger these broad market downturns.
But there's an interesting thing, though. Some analysts in India, they were actually recommending a pretty defensive strategy. They were saying investors should focus on companies that mostly serve the domestic Indian market, which makes sense, right?
Oh, yeah.
If global trade's going to be all messed up and unpredictable because of these tariffs, then companies that rely mostly on local demand, they might actually be a safer bet.
Yeah, it's a pretty logical strategy when you're dealing with all this international trade tension. Companies that are focused on their home markets, they're less likely to get directly whacked by tariffs and all the supply chain disruptions that come with it.
Right.
So in a volatile environment like this, that can make them a lot more resilient.
And to add another layer to this whole global web of reactions, the Economic Times article, it mentioned that the European Union, they actually retaliated, and they imposed tariffs on U.S. products. So it really looks like this thing has the potential to escalate into a full-blown trade war, just like everyone was afraid of.
Yeah, the EU hitting back with their own tariffs, that's a pretty clear sign that those initial U.S. tariffs are probably going to lead to even more trade disputes. And when you've got these major trading partners, they start throwing tariffs at each other, it can create this really nasty cycle. It harms global trade, it slows down economic growth, and ultimately it all comes back to bite the financial markets.
So in the middle of all this market chaos, we also saw some pretty wildly different opinions and predictions pop up.
Oh, for sure.
I mean, President Trump, he seemed pretty optimistic, saying that everything was going very well and that the market would bounce back eventually. He seemed to think this was just like a necessary growing pain for the economy, you know, a little bit of a bump in the road, which is a pretty stark contrast to those Black Monday scenarios that we were talking about earlier.
Yeah, that's a very different take on things. I think President Trump's optimism, it comes from his belief that ultimately these tariffs are going to be good for the U.S. economy in the long run.
Right.
He thinks they're going to encourage companies to produce more stuff here in the U.S., and that'll help shrink those trade deficits.
Yeah.
So he's basically saying that this current market downturn, it's just a short-term adjustment that we got to go through to reach those long-term goals.
But then, on the other side of the coin, you've got Jim Cramer. He's doubling down on his warnings, and the economists are out there raising those red flags about a possible recession.
Yeah.
And then you've got Treasury Secretary Bessent. He's offering up his own interpretation, saying that the market drop, it's more about how those Mag 7 tech stocks are doing than anything to do with the tariffs themselves. It's almost like everyone's trying to figure out who to blame for this whole mess.
It's like a big game of who'd done it. I think these conflicting opinions, they just show you how complicated the situation really is and how hard it is to say with any certainty that any one thing is responsible for what's happening in the markets. I mean, yeah, these global tariffs are a big deal. There's no question about that. But there are other things going on too, like how those big tech companies are performing and just the overall global economic outlook and all those things, they're influencing how investors are feeling and what they're doing.
It was also interesting to see all the different takes on the Indian market specifically. You had some analysts, like Jim Walker, who's famous for predicting that 2008 financial crisis.
Oh, right.
He was actually saying that this might be a good time to buy Indian stocks, pointing to India's strong growth potential. But then you had someone like Mark Faber, who everyone calls Dr. Doom because he's always so pessimistic, and he was advising people to sell their stocks if the market rebounds even a little. I mean, that's a pretty big difference of opinion.
It is. And I think those contrasting views on the Indian market, they just go to show how hard it is to predict what the market's going to do, especially when the whole global economy is in such a state of flux.
Right.
Walker's bullish on India probably because fundamentally their economy is pretty strong and they've got some really promising growth prospects, which could help them weather this trade war storm better than some other countries. But Faber, with his bearish outlook, he's probably worried that even an economy as strong as India's could eventually get dragged down if there's a global recession.
And then there's Warren Buffett. The guy's like playing by a completely different set of rules.
Yeah.
While all those other billionaires were watching their fortunes shrink, Warren Buffett's Berkshire Hathaway, they actually saw their value go up during this whole thing. Maybe having all that cash on hand like they always do is finally paying off in this kind of environment.
It's very possible. I mean, Buffett's always been known for having a ton of cash on hand and investing in companies that are fundamentally sound, but maybe a bit undervalued. And in a market like this, where everyone's panicking and things are so uncertain, having all that cash gives you the freedom to scoop up assets at bargain prices or just ride out the storm without having to sell anything. And those reports about him investing more in Japanese trading houses, that seems to be working out pretty well for him too. Which just goes to show that he's still focused on long-term value and he's not afraid to go against the crowd.
So to wrap it all up for you, it really looks like these new global tariffs, they were like a big rock thrown into a pond, right? creating these huge ripples across the stock market and the crypto world. People got scared. They started talking about a recession, even the possibility of another Black Monday.
Yeah.
But then we also saw this really interesting thing happening with Bitcoin. It's almost like it started to be seen as a safer bet, even being called a store of value.
Yeah.
In the middle of all this uncertainty.
Exactly. I think the big takeaways here are that those tariffs had a really immediate and powerful impact on the global markets.
Right.
They basically injected a ton of volatility and uncertainty into the system. And even though we don't know exactly what the long-term consequences are going to be yet, that initial reaction, it shows you just how sensitive global financial markets are to these kinds of big changes in trade policy.
Yeah.
And then you've got Bitcoin, which was performing differently from everything else, and the way people were talking about it was changing too. That suggests that maybe its role in the financial world is evolving, and maybe it really can act as a safe haven during times of economic stress.
It's definitely a complicated situation with all these different factors intertwined, and everyone's got their own opinion about what it all means for the future. So with all these different viewpoints flying around from government officials, market commentators, investors, what are you going to be watching to figure out what these tariffs really mean for the global economy and your own finances in the long run? Maybe keeping an eye on those international trade negotiations, seeing if they make any progress.
Yeah.
Digging into those corporate earnings reports to see how businesses are actually being affected. And watching what the central banks around the world are doing. Those could all give you some valuable clues as this whole thing continues to unfold.
Yeah.
It's definitely something to keep a close eye on.
It is.